We've been talking to a lot of Squarespace employees this week. So there was a message I wanted to send out as it relates to tax, specifically to Squarespace folks, but this could also apply to anyone that's going through a transaction similar to this. If you haven't noticed in the news, Squarespace is going private. That transaction has been approved, and employees will start receiving some proceeds, hopefully soon, for their equity comp that's involved in that transaction. So the top thing that I want Squarespace employees to know is that even though you're going to see a lot of tax withheld from the proceeds from this transaction, keep in mind that this is a number of different taxes. So it's income tax from the federal side, it's state income tax if you live in a state with income tax. It's Social Security, it's Medicare. So all of that's going to feel like a lot of taxes are withheld. It could be 40, 50%, depending on the rates in your state. The important thing to keep in mind is the IRS views stock compensation like this as supplemental compensation. Supplemental compensation has a separate and distinct federal withholding tax rate, and in a lot of cases, a state rate as well, that is unique to supplemental comp, and it ignores everything that you put on your W-4 for withholding purposes. So I see a lot of employees and clients that come to us the year after a big transaction like this, and they're surprised at the federal tax liability that they owe on their tax return. And that could be because their withholding was set really well prior to this transaction. And, in most years, they maybe have a little bit of a balance due with the IRS, maybe a little bit of a refund. But for the most part, things are right on track. And then, boom, we kind of get this big transaction. Then all of a sudden, there's this huge federal tax liability at the end of the year. And it catches people by surprise all the time. The important thing to keep in mind is a supplemental compensation per IRS rules, and that means that the standard rate of withholding for IRS federal income tax purposes is 22%. Now, that's important for you to know, and it's also important for you to know what your tax bracket, what your marginal tax rate is. Tax brackets in the US for federal purposes go up all the way to 37%. So it means you could be under withheld on this supplemental compensation by up to 15% of the value. That's really important to know. It's important to know ahead of time before you deploy all those proceeds, especially because you want to leave money, you want to have money left over in your account if you think that you're going to have some under withholding. So, homework for Squarespace employees. One, double check what your tax bracket is going to be, what your marginal tax bracket, basically the highest tax bracket that you're going to be subject to this year. And it might be different than before, depending on the size of your equity award. So know what your marginal tax bracket is. Know that the default rate for withholding on this for federal income tax purposes, not all those other taxes that we were talking about, just for federal income tax purposes, is 22%. Figure out the difference between those two numbers and make sure that you're setting aside some of that cash to pay taxes for next year. And also, as a side item, double check and see if you need to make any estimated tax payments this year. You may not, if this is a much higher income year than normal, but view those, verify those rules on estimated payments and see if they might apply to you. All right. Good news for Squarespace employees. Great to receive those proceeds, but got to watch out for taxes. And that applies for anybody else going through a transaction where they're getting some liquidity on equity comp. So just wanted to leave you with that message today. Obviously, if we can help out, please follow up. Hit up our website, book an intro call. We'd be happy to talk to you. Thanks.